What's up, guys? It's February 21st, 2024. Pretty annoying day. Really tight consolidation until FOMC minutes, and then it got spicy at the end of the day. Yeah, super annoying. First 6 bars of the day is range bound, but when we have FOMC or a big news event that happens later in the day, Al says to kind of reset the day. So this would reset the day. But we'll still talk about it just to keep the momentum. First 6 bars of the day are range bound. And that is important because we did get range bound price action up until that for the first 4 hours of the day. So bar 1, we have a gap down, big gap down. Bar 1 is continuation. Oh, 1 second here. I forgot to get the pen out. So bar 1 is continuation. Bar 2 is a bull bar. Bar 1 is also a doji bar. So we can see right here. It has a bare body, but it's a doji, so that's a range bar. Bulls buy the low of it, and they sell to the highs of this range, and then they're short the high of that range for bar 3, and bar 4 is continuation. But look at what type of continuation it is. Bulls bought the last bear bar, and bears shorted the last bull bar, so maybe this is range bound price action. Range at the bottom of a range. And bulls take it for a buy vacuum up into the EMA. When there's breakouts in range bound environments, we have to ask ourselves, are these buy and sell vacuums, or are these reliable breakouts? Really bad follow through for the bulls, good follow through for the bears. EMA is still acting as resistance. We are under the higher time frame, which is a screen 145 minute. EMA was acting as resistance yesterday, so maybe not the best long. I actually got trapped here. I got out around this bar. Not the best. I think it's okay to buy it, but once you start to see the bad follow through, you gotta plan your exit. I could have had a timely exit and just put my limit there, but I waited a little bit longer because this was a bull bar. So this creates a lower high for the bears. Bear flag, gap down, continuation, lower high, and it's a good short into the lows of the range, and then it goes sideways again. You see, there's a lot of sideways price action today. There was a guest speaker in the FOMC minute, so I think the market was just kind of waiting around. Bulls go for the breakout and it fails. It's a good short. It's a mean reversion market. This makes 3 pushes up for the bulls. 1, so 1, 2, and 3. Well, that's a wedge top. So 3 failed attempts by the bulls. And now bears get a turn. They get leg 1, leg 2, leg 3, leg 4. Or you can see this as the leg 1, leg 2, leg 3, and leg 4. So wedge bottom here. So here's a wedge top for the bulls. 3 failed. 3 breakouts that failed. Here's a wedge bottom for the bears. 1, 2, and 3. And it's the same thing. Bears tried 3 times and failed. I think they were going for yesterday's low. I got trapped in this bar going for yesterday's low. And bulls reversed for a leg up. And the EMA is talking resistance. We got sell vacuum into yesterday's low. And then we go sideways into a FOMC minutes. Lots of sideways price action in the first 6 bars of the day tell us that. It's hard to count legs in range bound environments. It's better to wait for 2-bar breakout. Even if you waited here though, after FOMC minutes, like 1, like 2, like 3. This is a nice wedge bottom below yesterday's low. It's okay to look for reversals around the extremes of the day as long as it makes sense. I think this really made sense this could be a wedge bottom, double bottom. When the double bottom is formed, bears get short here. Bulls buy lows, the market pulls up. Bears get short again, and they want to get out their original price here, so they make a little bit of money on the way down and they get out. Bulls buy the lows again, bears buy back their shorts, and that creates a buy vacuum. I was long here I bought this bar, and my target was the open of the day, but I just got out on this bar because it became climactic compared to everything else. However, that was going to be the trade of the day. I made a lot of points, but it is what it is. Buy vacuum at the end of the day, testing the higher time frame EMA. And I'll go over the leg 1, leg 2 moves, which is not many. We'll just talk about the leg 1, 2 moves. Measuring it, I guess we can't measure it. So, leg 1, very deep pullback. It pulled 100% of the pullback. Leg 2 was met for the bulls. Leg 1, leg 2 was met. And then here's a fresh leg 1 maybe. But that is kind of met. But it's met if you hold to the news bar. So I'm going to leave this one there. I like this one a lot more. And this could also be a spike in channel. spike, channel, range. That's the market cycle. Very sideways price action. Leg 1, leg 2, leg 3 fails. This is a range bound bar at FOMC minutes. Bulls go for the breakout and fail, creating a very complex wedge top here. Bear flag here, here. I'm gonna leave it up there in case you guys want to see it a little bit longer. I know that stuff gets annoying when it disappears. And then go for 3 legs down. Breakout, second leg, pull back. Third leg, that creates a wedge bottom, implied wedge bottom here. Bulls get the breakout, range lows, below yesterday's low, reversal territory. And that's only if this is trending price action. That doesn't mean buy the dip until you get shredded. This price action supported the idea for a reversal behind yesterday's low, under yesterday's low. Where are we in the market cycle? This was a range bound day for me. It looks like an expanding triangle somewhat here. Just I'm doing this very roughly so you guys can see what I'm seeing, but I'm not saying this is the exact measurement. You know, maybe it could be like this, something. But the market was making new highs and lows all day, so it was expanding instead of contracting. These are I have a hard time with these days because I trade breakouts, so I keep getting trapped at extremes. But I was getting shredded around here, kind of going up 100, down 100, down 100, down 100, and then I made it back right here. Hope you guys didn't get too shredded. We are kind of range bound in market cycle. This is if you're thinking of a smaller time frame, this is a good breakout right here. So in terms of this being its own breakout, well, then we could be breakout, channel, range bound, and then the market's going to decide we're going to break out up or down. That's the market cycle. Happens all the time across all time frames. The way I like to trade is I look for the market cycle, then I figure out what legs we are, and I just trade appropriately. I do like trading leg 1 and leg 2s though. I drew this line yesterday, and then right when I got off the call, or this thing, I wanted to delete it, but then I was like, oh, let me delete it on camera so you guys can keep seeing what I'm doing. The reason I want to delete it is just because it looks corny as hell. I just don't like that many lines. We got the EMA, and I drew this line in like last week. It's being respected. It is the bears are starting to breach the line a little bit more now. See, it was just kind of touching. Now it bounced, and they played around the EMA. However, bad follow through with today's close, and now we have a gap up. We don't have a gap. We might have a gap up. I don't know if it's a gap up, but I know there's a lot of bull bars being printed. Yeah, see, hella bull bars being printed right now. So that's this price action right here is what we're seeing right here. I'm gonna leave this trend line, this brown trend line, up for as long as it's getting respected, because I just think that's so cool that it's getting respected on the daily time frame, and it works on the 5 minutes. So I want to see how it plays out on the daily. What I would be looking for is like, you know, continuation, and then eventually, whenever the bears decide to break out, come back and retest. If the trend line's good, it'll look nicely. If it's not, well, we tried. I hope you guys are studying using your stop loss. I know I'm learning. I'm starting to pick things up a lot faster. I am live. I've been live for a little bit, but I'm just waiting till I get the payout before I get all happy this time, because I think we all know how quick these accounts can blow up. Thank you for all the comments. Thank you for dropping questions. I appreciate the support. I drop these videos every day at 3 p.m. Keep asking me questions. I study Al Brooks. This is how I trade. I only trade from the Al Brooks perspective. Hit the follow button. Have a good day, everyone. I'll talk to you later. And I'm still learning how to trade. I'm not a professional. You know, I'm studying. Part of this reason why I made these videos was because I could feel myself getting better, because I'm learning how to talk about the markets, because I realized I couldn't even talk about what I was doing. So, yeah. It was suggested a long time ago in the trade room to learn how to talk about the markets, and it makes sense. It is actually really hard to talk about the markets. I suggest you guys try your own form of it. Maybe make your own YouTube, or just post your own. You don't have to even post it. Just make videos of you talking about your trades and see how hard it is. See if it even is hard. Maybe it's only me. Have a good one, guys. Hit the follow button. Thank you. I'll talk to you guys later. Thank you again. Bye.